Hello and welcome to myfinanceteacher.org. Today I would like to treat you guys with a quick look at the fundamental valuation of not one, not two, but three largest gold miners in the world. That's Newmont, Barrick Gold and Agnico Eagle. While there is a myriad of factors you might consider for your fundamental valuation, I stick to gold price, the amount of reserves and resources that the miners have in the ground, all-in sustaining costs of production, long-term debts, taxes. We'll look at the value per share, so we're going to look at the number of shares outstanding. We do take into account time value of money, so we discount based on the average mine life of all of the reserves in the ground. And there is a bit of an effect from the insider shares, which positively affect valuation, as the larger percentage of insider shares among the shares outstanding, the better alignment would be between the interests of the shareholders and the top management. And what we look at in this valuation is discounted per share value after all-in sustaining costs, long-term debts and taxes. Again, as I mentioned, there are multiple factors you could consider here for the fundamental valuation, and I try to strike a balance of considering quite a few of these factors and a bit of simplicity as well. So for taxes, for example, I don't go into too much details, and as Dave, you've mentioned many times, I don't really consider jurisdiction here either. So feel free to comment down in the comments below how would you bump up or bump down some of the valuations that we're going to look at today. And as usual, we're going to look at three scenarios for gold price. Our balance scenario is already below the current gold price. The balance scenario is at $1,900. Current gold price is slightly above $2,000 per ounce. Our conservative scenario is all the way down at $1,600 per ounce. And the optimistic scenario is at $2,200 per ounce. As you see, even our optimistic scenario is not outlandishly optimistic. 2,200 on gold price is not that much higher versus the ongoing price. And just as before, I do expect gold price to go much closer to, say, $3,000 perhaps over the next couple of years. And the links to the videos discussing that eventuality and how it connects to, let's say, CPI as well as the money supply, those links are down in the description. Next, looking at the reserves and resources in the ground, all of these three miners have some gold, silver and copper, with most value in gold. We see proven and probable reserves for Newmont at over 96 million ounces, and measured and indicated resources, that's M&I, at over 75 million ounces. Newmont also has reserves of silver of over 593 million ounces and resources of silver at nearly 500 million ounces. For copper, Newmont has 15.7 billion pounds, that would be in billion pounds, and 17.9 billion pounds of resources of copper, again measured and indicated resources. As you see here, we don't even include any of the inferred resources for either gold, silver and copper, again trying to lean away from positive outlooks all the way towards balanced and conservative outlooks in either of the scenarios. Looking at Barrick, they have slightly less in gold reserves but more in gold resources. Same for silver, Barrick has significantly less in silver reserves but more than Newmont in silver resources. And again, the same situation is for copper. A bit less of copper reserves compared to Newmont and a bit more of copper resources again compared to Newmont. These two are clearly head and shoulders above number 3 over here, Agnico Eagle, with under 50 million ounces in gold reserves, over 44 million ounces in gold resources, over 23 million ounces in silver reserves, over 63 million ounces in silver resources, and a little bit of copper here, that's in billions of pounds. Looking at the company's costs, debts and taxes, the all-in sustaining costs per gold equivalent ounce are somewhat similar at $1,200 for Newmont, $1,210 for Barrick, and $1,165 for Agnico Eagle. Looking at long-term debts, we have over $6 billion for Newmont, over $5.2 billion for Barrick, and under $1.4 billion for Agnico Eagle. As I mentioned, for taxes, to gain some simplicity, I just assume a flat tax of 20%. Moving on to the value per share and discounting, where we use a discount rate of only 5%. Again, perhaps higher discount rate would make more sense here. I perhaps wouldn't argue too much against somewhere around 7%. But for now, let's stick to 5%, as I have done many times in my previous videos. And looking at shares outstanding, Newmont has 795 million shares, out of which 0.11% is in the insider hands. Looking at proven and probable reserves versus current annual production, we have around 7 years of average mine life. If you add only half of M&I resources, that extends the average mine life to around 24 years. For Barrick, we have 1.76 billion shares outstanding, with over 0.5% in insider hands. That's pretty nice. As to the average mine life, we have 18 years for reserves, and if you add only half of the resources, the mine life extends to 31 years. Moving on to Agnico Eagle, they have 458 million shares outstanding with 0.12% in insider hands. Reserves are expected to last for 15 years at current annual production, and adding half of the resources extends the mine life to 21 years. So all of these are most of the fundamental numbers. Let's move on to the valuation, starting with the conservative valuation, where again, we only plug in the gold price of $1,600. And in this case, we only look at the proven and probable reserves in the ground and discard any of the resources, even M&I resources, at least for this scenario. So this is sort of a quick look of what might happen to the share prices if gold price just drops out of bed here. And just to remind you, we're looking at the discounted per share value after all-in sustaining costs, long-term debts and taxes. In which case, Newmont's valuation is over $29.50, Barrick's is over $9.50, and Agnico Eagle is just under $23 per share. Next, let's move into the balanced valuation, where we plug in the gold price of $1,900. But even in our balanced valuation, we still look at only proven and probable reserves in the ground, discarding any of the resources, either M&I or inferred resources. In which case, we have a valuation of over $54.50 for Newmont, around $18 for Barrick, and under $40 for Agnico Eagle. Most excitingly, if gold price continues to push higher, what's our optimistic valuation, where we plug in the gold price of $2,200, and that should be "and" over here, not a dollar sign. We look at the value of proven and probable reserves and only half of M&I resources, as those are slightly less certain compared to reserves. But even in our optimistic scenario, we still don't include any of the inferred resources. Again, trying to avoid being a little too optimistic. In this case, the discounted per share value after costs, debts and taxes is slightly over $100 for Newmont, over $39 for Barrick, and over $72 for Agnico Eagle. Wouldn't you just love to see these share prices, say perhaps over the next several months? That'll be amazing. At the moment though, the share prices are somewhere around the balanced valuation, even though gold price is well above $1,900. Perhaps the market is not convinced yet that gold price is ready to break above those all-time highs and stay there in the longer term. So even looking at these top 3 largest gold miners in the world, there is perhaps some undervaluation here. And if you like undervaluation, wait until you look at some of our results of our quest for the most delicious junior miners. For that, go to myfinancesteacher.org, and over here in the category of juniors in metals, I often write about some of the most promising developers and an occasional look at explorers as well. And lastly, all of the fundamental numbers for these top 3 miners come from the annual report that's basically from the end of 2022. Pretty soon though, I will have a look at the Q1 2023 reports and share my views with you. This info has been available to the members at myfinancesteacher.org with much more details for quite a while, so again, consider joining us to stay up to date. For now though, hit that like button, subscribe to the channel, and enjoy your day. Bye bye.